commodities are leading indicators of equity market, and if we happen to understand commodities better, and if we happen to understand the commodity that we are very familiarized with, we can probably take some benefit of it.
To be a better trader and investor, you need to understand what
The cycles.
Cycle is one. Second is what is that which is driving your asset class.
Right.
So if you are an equity trader, you are a derivatives trader, you should understand that there is something beyond analyzing companies' financials.
Right.
You know, and those bigger things are much important than only looking at the financials of a company.
Right.
Because if the overall sector, if the overall the underlying in which your company is in, if that underlying is not performing, whatsoever good and efficient your management is, your company will not deliver up to the performance. Right. So for somebody who is getting into financial markets, now it's an age of financial literacy, right? So you should not stick yourself to one asset class.
Right.
Should understand the broader
markets,
and commodities definitely will give you that edge. If you learn, if you want to be a better trader, and why not explore a market which is growing so exponentially, especially in India.
Absolutely. Hey everyone, welcome to Upsurge podcast. Today we have with us Jay Prakash Gupta. He's the founder at Dhan. He's been into the market for the last 18 years, working extensively with stockbrokers and as analyst also, and it's a privilege for us to have Jay with us today. First of all, Jay, thanks for agreeing to do this. It means a lot to us.
It's my pleasure, Prateek. Yeah.
I've been watching markets for the last 10 years or so, and it's quite comical what's happening into the markets right now, where while the volatility is quite there, but we do not know the direction. It fluctuates a lot, and at this point in time, at this juncture, what kind of markets are you looking at?
Well, Prateek, see, markets, it's a phenomena, right? So market is never unidirectional. So what we had seen in last couple of years during COVID times was an aberration, right? So market has always been historically volatile. For at this point of time, if you talk about equities market, right? So as you rightly said, it's directionless because what's coming in the future, nobody knows about it. And there are so many headwinds, right? Right from starting from US, China, Taiwan issues, then Russia-Ukraine war. Then the US running such huge deficits. There is no strong leadership in US, right? So Biden has not been proved to be a successful president so far.
Absolutely.
Apart from that, there is always a fear of inflation. There is a fear of global recession. So equities markets are likely to be uncertain for next 8 months or 1 year. But what is happening interestingly, as far as Indian markets is concerned, is there has been a huge traction happening on the commodities side. So commodities market was always under penetrated. The market lacked depth. The market didn't have much of the instruments to trade on. It was only futures which were allowed to trade. But in last 3 years, there have been so many new things which has come up. They are doing very well on the option side. Mutual funds are allowed to participate. Now very soon you will have FPIs who will also be participating. The whole ecosystem is changing, and that's clearly reflected in the kind of volumes you are seeing on the exchanges. Just to give you a data, last year commodity options was around 900 crores, single side.
On a daily basis.
On a daily basis. So currently it's around 33,000 crores.
Quite a jump.
It's almost 40x jump.
Correct.
So, and globally, even if you see, right, commodities market are almost thrice of equities market. So in India, I believe that this is a market to watch out for. And for traders, somebody who is new to market, commodities gives you a better perspective because it's directly linked with demand and supply. Right. So there is always a third element on the equity side, which is management. You don't know about the quality of the management, how the company is functioning, but you have a very direct correlation with demand and supply
in terms of commodity.
In commodities market. So I think for a beginner, this is a market you should look at with the kind of instruments available. The options have very high liquidity. Futures are also doing well. The volumes are increasing. And you have some serious participants who are coming into market. Mutual funds, they are serious guys. If FPI is allowed, I think this market is
It's a
likely
game
to grow.
changer.
It can be a game changer.
This is very interesting, Jay, especially given the 40x jump that you talked about.
Yeah.
So, for someone who's looking into the equity market, how can they jump onto the commodities market, and is there a linkage between the two?
Well, I'd answer the second one first. There is obviously a linkage.
Okay.
If we talk only about the index composition, if you see direct metals and energy have almost 20% of share in the Nifty index.
Oh, right.
Okay. So, and the kind of movements we have seen in metals in last couple of years, as well as in energy, in crude oil and natural gas.
Exorbitant.
There's been, from zero, almost a negative pricing in crude oil to $120. That's been phenomenal.
Correct.
Right. So you always can correlate, what's happening in commodities market, but usually what happens is, equities market or economy always has a lag effect of what's happening in commodities market, right? So if you understand commodities well, if you are able to study the demand,
Study the
supply.
cycle of commodities, it can also help you with the equities
Exactly,
market.
exactly.
Yeah.
So if you take example, right, so when crude was at 120, right, so there are a lot of sectors, including your paint industry, there are host of industries where
Correct.
the important raw material is crude oil, right? So those industries, raw material prices have gone up.
Correct.
Their margins are likely to shrink. If you
Correct.
hold position in those stocks, you can better exit or try to hedge those positions.
Correct.
Same thing work for metal as well.
Right.
So copper prices made lifetime highs, aluminum prices went up. If you see the raw material prices going up, you always will have impact on your margins, right?
Right.
So, and if there are large companies who have backward integrations, who have a huge surplus of finished goods, they had a windfall.
Correct.
So understanding commodities, how the cycle is going to behave, obviously helps you in designing your portfolio in a better way on the equities market.
That's quite interesting, Jay.
Yeah.
Especially even crude has a direct impact on inflation. So
Exactly, yeah. Especially for countries like
ours, wherein all the transportation cost is deeply linked with crude, and if transportation goes up, FMCG goods prices goes up,
Exactly.
and everything else goes for a toss,
Yes.
basically. So I completely second you on the thought that if we understand the commodities, it's probably a leading indicator of what's going to happen in the economy going forward.
Exactly.
So
Yeah.
kudos to your 2 cents on that. So for someone who is just stepping into this commodities market, what will be your piece of advice? What can possibly go wrong for the trader, and what he should be very careful about? Yeah, I need to watch out for these parameters before even getting into the commodities side of the trading.
Well, for any beginner, right, it's always better to start small, whether you want to start in equities, in derivatives, or in commodities.
Right.
Okay, so the first thing which you need to look at is understand your risk return profile. You need to understand your risk appetite.
Right.
See, one thing which works as advantage as well as disadvantage in commodities is that the margin requirement is very, very low compared to what equities is. Just to give an example, if you are trading in Nifty, right, in futures the margin requirement varies from 12 to 15%.
Correct.
Whereas the maximum margin in commodities is 5%.
Okay.
Okay, so your leverage is very,
Quite
very
high. Yeah.
Okay. So, second is you need to identify commodities which you understand, which you can correlate with your daily lives.
Correct.
Okay, so the very basic commodity which everybody in India understands is gold.
Gold. Yeah.
Right, because every household knows, right, what's the gold price is and what's likely when it goes up, comes down. So to track, say, gold, for example, what you need to always watch out for, there are few very basic indicators, like when economy is not doing well, when there is a war-like scenario, when there is recession, you always find people move to safe haven.
Correct.
Okay, and the gold prices go up.
Correct.
Okay, so now if our economy goes into recession or if equity market goes
people
for a
will
toss,
find peace in gold.
Exactly.
Yeah.
And when markets are volatile, you always need to have more allocation towards other asset classes, and gold is a preferred one when market doesn't work.
Yeah.
Okay, so gold is something which you understand, and there are datas available. And third thing is you can't operate or rig prices in gold because it's a huge market, right? It's a global market, and India is one of the leading players. So there are certain data points which come, say, in every first Friday of the month, you get data from US which speaks about unemployment. Okay.
Right.
So if you track that, if US is the leading market, right?
Correct. Everyone else follows.
Everyone else follows. So if there is unemployment rate which is going up in US, US economy may not do well, and that will have a positive linkage on your commodity prices.
Correct.
So you can create position in gold in that case. Okay. So if you don't want to get into say a large contract, you can start with options first. Okay.
Smaller positions.
Smaller positions. Just to take you to another example, say crude oil prices are very volatile nowadays, and
Correct.
you know the factors which affect crude oil prices. If you hear anything which is happening in Middle East, right? There is some kind of war-like scenario in Israel, in Iran, or Saudi Arabia. Crude price has shot up.
Correct.
Okay. If there is fall in inventory which comes on every Wednesday at 8 p.m. Indian time, you get crude oil inventory data. So it shows whether there is a pile up of inventory or the inventory is falling. So when the inventory is down or it's negative, it shows that there is less crude available
In the market.
right? So prices will go up.
Probably
now,
gonna go up.
Probably will go up. Now, if you have to trade that, the better way is not to get into futures, but start with options, right? Where
Shorting
you
your-
understand there is a limited amount of premium which you are paying. This you are doing to test, a market, understand its depth.
Short positions.
Short or long, whatever you can create, you can use options for trading, and the contracts are highly liquid.
Correct.
Yeah. So one more thing you can look at is say market closes at 3:30, Indian equities market, right?
Correct.
So there are certain announcements, certain news flows which come post the market has closed, okay, and you don't know how you would act on that. So there is something which has come very negative, and you know that the next day morning the market is likely to open gap down
on a gap down. Yeah.
on a gap down. So you can create a hedge here. It may not be a perfect hedge, but it can be a partial hedge as well. If you know that something which is very negative, which can be positive for gold and silver, you can create positions in gold and silver, which will at least offset the next day's gap down loss which you may have on your portfolio.
A lot of people here would not even know that commodities trading stretches till 11 o'clock in the night.
11:30 at night.
11:30 into the night.
Yes.
So that's quite a interesting insight that if you want to hedge your next day's position, you can actually take some positions during the day in the commodities market till 11:30 in the night.
Yeah.
So that's again interesting insight, Jay.
So there's one more thing, Prateek. You asked me, right? So I'd just like to throw light on that. See how it makes more sense for you to understand commodities is. See how I see is commodities is a bigger set, and equity or any other asset class is a subset of it.
Correct.
Say take for example few years back there was a scenario when there was coffee production got damaged in Brazil. Okay.
Right.
So there was hardly any coffee available
in the world market.
In the world market. So it was pretty obvious that the prices would go up. Coffee prices would go up, and there are certain companies whose stocks are traded on Indian equities market. They had their own supplies at that point of time. So they were able to take advantage of it.
Right.
So if you want to build a position, right, understanding commodities market gives you that idea whether you should get into that position or not.
Correct.
So the same thing works for a lot of metal companies. There are companies listed in India whose primary product is aluminum, copper, and all. Right. So if they know that there is a supply crunch, there is some mine which is getting shut in Latin America. Okay, they will always have a better understanding that how the pricing is going to behave in future, and they can accordingly.
They can probably take some benefit into the commodities.
Exactly. Yes. So as I said, right. So if you want to understand a subset,
a broader market understanding is probably the most important thing.
And it not only makes you a better commodity trader, it also makes you a better investor as well. Because you are informed
also,
not only about
also a businessman for that matter. It makes it helps you so much to get your business acumen into the commodities market and hedge your positions, or typically take benefit of it.
Exactly.
One piece of advice that sticks with me is do what you understand. So if you understand metals, if you understand gold, if you understand commodities, only then you go on and actually do the trades, because people often try to take benefit of volatile stocks or volatile commodities, and that's where they fail.
Yes.
So understanding where they are trying to have their positions into will probably be a good piece of advice.
Yeah, and there's ample of data available, right? So the data, there are timelines fixed. You know, you have the whole calendar for a month on which day which data is going to be released, right?
Right.
And based on that data, you can pretty well have a judgment because it's all demand and supply which works,
Absolutely,
right?
yeah.
So you don't need to go into the operating margins of a company or understand what quality of management the company has. You can understand commodities better in that
A
way.
broader understanding of economics will help. You need not know finance or you need not know accountancy. Just a broader
Exactly.
economic sense would help into the commodities market.
Correct.
We have talked about how oil prices, gold prices, or even any other commodities for that matter can have a leading indicator of the equities market. But is there a leading indicator to commodities markets, such as what is happening in the geopolitical scenario where we are essentially moving towards deglobalization? We are essentially moving towards anti-China sentiment, anti-Russia sentiment. So how do you think those sentiments will pan out in terms of commodity prices?
Well, it's a very interesting question, Prateek. See what we are witnessing in last couple of years. The whole thing has intensified. There was
Correct.
always talks around
And
that.
no one is holding back.
Yeah, and there was always a talk around that globalization is likely to end, and how the things will happen. So what this COVID has shown us is that those days of efficiency, ensuring your just-in-time thing, your supply chain is very smooth is gone. So most of the countries are thinking about themselves now. It all
Correct.
started with US when Mr. Trump was president.
Correct.
Right. During COVID times, we have seen hoarding happening on vaccines. Hoarding happening on lot of essential items, lot of metals as well.
Correct.
If you just I was reading somewhere, there's a data that there have been more than 6% spurt in demand for capital goods because of the fact that a lot of developed nations wants to hoard because they were not
They were not ready to share, plus they wanted to have it themselves.
And if if you think that the era of globalization is ending, every country will try to protect themselves first.
Absolutely.
There may be shift in trade blocks. There could be renegotiations happening between trading partners. We are seeing that now. See, India Russia has come closer in spite of the fact that there has been sanction from US on Russia, right? India is buying oil from Russia.
Correct.
So you need to have your trading partners based on that trust. Who will be with you always, right?
Correct.
So that if that happens, you will see that a lot of hoarding happening on the commodity side.
On a country level, on a trading block level.
On a trading block level, exactly. So this will obviously create more demand for commodities, right? And that we are witnessing this. See in copper prices or there is the demand supply scenario in copper is very different what it used to be 3 years back.
Correct.
Same thing goes for other base metals. Same thing may work for natural gas, right? If Russia doesn't supply natural gas to Germany, they need to figure out how to escape
the whole
this
economy
winter.
will go for a toss.
Or they need to figure out, right? They need to again innovate themselves that how they can be self-reliant rather than depending on some other countries. So if that works, I think you may expect another big super cycle in commodities, right? And usually commodity super cycles are pretty long. It lasts for at least 10, 12 years. Last we had seen in 2000, then it lasted for almost 2010, 11. If this happens, there are golden times ahead for people who have direct exposure in commodities.
So there's a lot of money to be minted in terms of commodities and commodities trading. During the whole conversation, if I have to take home one idea is commodities are leading indicators of equity market, and if we happen to understand commodities better, and if we happen to understand the commodity that we are very familiarized with, we can probably take some benefit of it. Thanks again, Jay. It's been a great time to have you in our podcast.
Yeah, just to add, one disclaimer. I'm not advocating that you should get into commodities or start buying certain commodities. But just to give you a broader picture, to be a better trader and investor, you need to understand what
the cycles.
Cycle is one. Second is what is that which is driving your asset class. So if you are an equity trader, you are a derivatives trader, you should understand that there is something beyond analyzing companies' financials,
Right.
and those bigger things are much important than only looking at the financials of a company.
Right.
Because if the overall sector, if the overall the underlying in which your company is in, if that underlying is not performing, whatsoever good and efficient your management is, your company will not deliver
Right.
up to
Absolutely.
the performance. Right. So for somebody who is getting into financial markets, now it's the age of financial literacy, right? So you should not stick yourself to one asset class.
Right.
Should understand the broader
markets,
and commodities definitely will give you that edge. If you learn, if you want to be a better trader, and why not explore a market which is growing so exponentially,
Absolutely.
especially in India.
Absolutely. So thanks, Jay, for agreeing to do this. This was very insightful. I am sold on commodities trading because it gives me much more sense of the markets. So thanks for agreeing to do this again.
My pleasure, Prateek.
And I'm sure you guys must have enjoyed the whole session. This is quite a teaser of the course that we are coming out with. Jay has been into the commodities market for quite a while now, and we wanted to bring to you guys what commodities trading is all about into our course, which is going to be live on our platform soon. So stay tuned for that, and on Upsurge.club, it is always fun, simple and engaging. Thank you.